Let's get in S. Naren, CIO at ICICI Prudential AMC as well, to chat about what he feels about the market. Naren, hi. You think in terms of fundamentals, the market is fairly poised at the current level, or is there more weakness according to you?
I think we have to remember that at this point of time, many of the markets are at all-time highs, like for example, the American markets. And that has been a big support to the Indian market. In our opinion, the global situation, if it continues to be positive, it would be actually a big support to the Indian market. On the other hand, there are risks of central banks tightening, which could have a negative impact on many of the equity markets in the world, including markets which have touched new highs.
Naren, but fundamentally, do you think the government is doing enough to contain the twin deficit for FY14? The GDP target of 6.5% as well sounds realistic after registering a GDP growth of 4.5% in the December quarter.
See, actually, when we look at GDP numbers, GDP numbers has a lot of elements like services growth, for example. If you see what are the indicators which have shown 5-6% growth, even in the current year, there have been very few. If you see car numbers, they've been actually degrowing significantly. Commercial vehicle numbers, they've just fallen off a cliff. If you see other numbers like air travel, the growth has been big negative. So I think we don't worry so much about GDP numbers as we worry about some of the more sensitive numbers. So if you see, for example, numbers like electricity generation going up very significantly, that we would view as a very big positive. If along with that, let's say something like a two-wheeler sales number goes up significantly, that we would view as a big positive. So you're not so focused on GDP growth because there are elements like agriculture which are totally dependent on the monsoon. You can have a very good monsoon and you'll have agriculture GDP growing at 3-4%. But on the other hand, if the monsoon turns out to be bad, which is totally out of the control of the government, you can have a negative number in agriculture, which leads to a lower GDP number. So I think, having said that, I think we are closer to the bottom of the entire GDP downgrade situation. At the same time, we need a lot of incentives for investments. The recent investment allowance reserve account is a powerful positive, but we need to again make a lot of steps like, we keep reading about a lot of coal block allocation, cancellation and things like that. If we retard the investment cycle, I think it would actually be very negative.
Naren, you made a point that at the current juncture, large cap stocks are looking slightly stretched, but the real value or the visible value now is there in mid cap stocks. So what are you planning to buy from the beaten down mid cap space? What do you like from the mid cap rec?
I think we have a number of mid cap stocks, and many of those mid cap stocks we are looking to add. We have also got funds which are focused on mid caps, in which we have added a number of mid caps in the last few months. So we've used the opportunity selectively as we should do.
Naren, if one looks at your holdings, you are bullish on oil and gas stocks like KN as well as Reliance. Both stocks on a year-to-date basis are flat to negative. What kind of returns are you expecting from these stocks going forward?
So we don't comment on individual stocks. In our view, there are cycles which play up. We've seen that some of the sectors like oil and gas have done pretty badly in the recent past, giving opportunity for returns in the future. The valuations of many of the stocks have also corrected significantly, giving us opportunities. So that's the reason why we have good positions in some of the oil and gas stocks. We don't talk on individual stocks.
But banking and finance as well has, Naren, been topping the list in terms of sector allocation for your funds. What makes you so bullish on this space?
See, in our view, we believe that as the economy improves, banking will be one of the sectors which will benefit a lot. Having said that, we need to see further improvement in the economy so that NPL accretion does not happen. We have been selectively positive on specific stocks in the sector, and we continue with a stock-specific approach in view of the risks of non-performing loans in many parts of the credit areas.
Naren, of late you've reduced your exposure to the entire telecom space. I distinctly remember that Bharti was one of your top position in your in your portfolio till about 3 months ago. So why have you reduced your exposure to telecom? Is this largely because of redemption, or you think fundamentally it's difficult to justify a move beyond 350 for Bharti?
See, one is I don't think the company or the industry has seen big redemption pressure in the recent past. So I don't think there has been any selling due to redemption pressure. However, we have strategies like the dynamic plan which do sell as the markets go up and buy as the market goes down. In the case of telecom, we had a fairly outsized position and we saw good return in the sector, which we thought has happened pretty quickly, much faster than we had anticipated. So we used the opportunity to actually do some profit taking.
Naren, you've also allocated 4 to 5% of your holdings in metals, which has been witnessing a global sell-off. Will you remain invested in this space? NMDC 2, which features in your top 10 buy list, has fallen below its OFS price.
The commodity stocks are very attractive. However, the stocks tend to move up and down in line with global sentiment. Recently, the stocks have fallen and therefore the current levels are pretty attractive. We believe that this is a higher risk sector where there's a substantial amount of valuation comfort.
So Naren, are you looking to invest in any of the divestment candidates, SAIL, NALCO, MMTC?
So we don't talk again on individual stocks, but we participated in many of the disinvestment programs which have been done at very attractive price levels. So if we see a good risk-return trade-off in some of the disinvestments, we'll definitely participate. Most of the PSU companies have a very strong business model focused on one specific industry. So the industry outlook is good. They actually tend to be very attractive for investment. So we will look at a stock-specific approach instead of making a statement on all disinvestments.